There is a strange pattern hidden behind many of the world's greatest thinkers. Before they built companies, before they changed industries, before their names appeared in headlines and financial history books, they spent countless quiet hours doing something much less dramatic. They read. Great minds rarely appear out of nowhere. Behind every extraordinary thinker is a hidden library, a collection of books that slowly shaped the way they see the world. And if there is one modern figure who represents this truth more than almost anyone else, it is the legendary investor Warren Buffett. Today he is known as the Oracle of Omaha, one of the most successful investors in history and the longtime leader of Berkshire Hathaway. But long before billions of dollars and global fame, Buffett was simply a curious young man, obsessed with understanding how businesses worked. He did not learn those lessons in glamorous boardrooms or secret investment clubs. He learned them through books. Books that taught him how markets behave. Books that taught him how to evaluate businesses. Books that helped him build a philosophy of patience and rational thinking. Tonight, we are going to explore three of the most important books that helped build the intellectual foundation of Warren Buffett's mind. These books did not simply influence his career. They shaped the way he thinks about money, risk, patience, and human behavior. And if you understand the ideas inside these books, you begin to see how one quiet reader eventually became one of the most disciplined investors the world has ever seen. Welcome to Trillion Books, where we explore the hidden libraries behind the world's greatest thinkers. The young reader who wanted to understand money. Warren Buffett was born in Omaha, Nebraska in 1930. From a very young age, he showed an unusual curiosity about business. While many children were focused on games or school subjects, Buffett was fascinated by numbers, prices, and the mysterious movements of markets. At the age of 11, he bought his first stock. But the real turning point in his intellectual life did not come from a trade. It came from reading. Buffett has often said that the most important habit of his life is reading. He estimates that he spends around 80% of his day reading and thinking. This habit began when he was young, and it eventually led him to discover a book that would completely transform how he approached investing. That book was written by a professor at Columbia Business School, and its title would eventually become legendary among investors. The Intelligent Investor, the foundation of Buffett's philosophy. The first, and perhaps most important book in Warren Buffett's intellectual journey, is the classic investment work, The Intelligent Investor, by Benjamin Graham. When Buffett first read this book as a young student, he described the experience as life-changing. Until that moment, investing had seemed like a confusing mixture of speculation, rumors, and market excitement. But Graham introduced a radically different approach. Instead of treating the stock market like a casino, Graham argued that investors should think like business owners. Every stock represents a real company, and the value of that company depends on its assets, earnings, and long-term potential. One of the most powerful ideas in the book is the concept of Mr. Market. Graham asked readers to imagine the stock market as a strange business partner named Mr. Market. Every day, Mr. Market offers to buy your shares or sell you his shares at a different price. Some days he is optimistic and offers extremely high prices. Other days, he is depressed and offers very low prices. But the key insight is that you do not have to follow Mr. Market's emotions. You can simply take advantage of his irrational behavior. This idea changed how Buffett saw the market forever. Instead of reacting to short-term price movements, he learned to focus on the intrinsic value of businesses. If the market offered a good company at a cheap price, that was an opportunity. If the market became overly excited and pushed prices too high, that was a warning. This philosophy became the foundation of Buffett's entire investing career. Even decades later, Buffett still refers to The Intelligent Investor as the best book on investing ever written. But that was not the only book by Benjamin Graham that shaped his thinking. Another work went even deeper into the analytical side of investing, and it would become one of the most demanding finance books ever written. Security Analysis: Learning to Think Like an Investor. The second major influence on Buffett's intellectual development was another book by Benjamin Graham, written together with his colleague David Dodd. This book was called Security Analysis. If the intelligent investor introduced the philosophy of value investing, security analysis taught readers the technical discipline required to apply that philosophy. The book is not light reading. It dives deeply into financial statements, corporate balance sheets, and the detailed evaluation of companies. But for Buffett, this complexity was exactly what made the book powerful. It taught him how to analyze businesses with precision. Instead of guessing or following market trends, he learned to examine the financial structure of companies. He studied assets, liabilities, earnings, competitive position. Through this analytical framework, Buffett began to understand a simple but powerful idea. A stock is not just a symbol on a screen. It represents ownership in a real business. And when you buy shares, you are essentially buying a piece of that business. This perspective transformed how Buffett approached investing. He stopped thinking like a trader. He started thinking like an owner. This mindset would later guide some of his most famous investments, from insurance companies to railroads to consumer brands. But as Buffett continued to grow as an investor, he encountered another book that expanded his thinking even further. This book introduced a new dimension to value investing. It showed him how to evaluate not just cheap companies, but great companies, common stocks and uncommon profits, the search for great businesses. The third major influence in Buffett's intellectual development was the investment classic Common Stocks and Uncommon Profits by Philip Fisher. While Benjamin Graham focused heavily on financial analysis and undervalued assets, Fisher introduced a different perspective. He emphasized the importance of business quality and long-term growth. Fisher believed that truly exceptional companies could create enormous wealth if investors were willing to hold them for long periods of time. Instead of constantly searching for cheap stocks, he encouraged investors to find businesses with strong management, innovative products, and durable competitive advantages. One of Fisher's most famous concepts was the idea of scuttlebutt research. Rather than relying solely on financial reports, investors should gather information from many sources. They should speak with employees, suppliers, competitors, and customers to understand how a company truly operates. Buffett later adopted many of these ideas. Over time, his strategy evolved from buying merely cheap companies to buying excellent companies at reasonable prices. This shift helped lead to some of his most famous investments. Companies like Coca-Cola, American Express, and Apple were not necessarily the cheapest stocks available. But they were powerful businesses with strong brands and long-term growth potential. And by holding them patiently for decades, Buffett was able to benefit from the compounding power of great companies. The reading pattern. Behind Buffett's mind. When you look at these three books together, something fascinating emerges. They reveal the pattern behind Buffett's intellectual development. Benjamin Graham taught him discipline and rationality. Philip Fisher taught him the value of great businesses. Together, these ideas formed a powerful investment philosophy built on patience, analysis, and long-term thinking. But perhaps the most important lesson from Buffett's story is not any single investment strategy. It is the habit that made all of this possible: reading. Buffett once gave a piece of advice that has become famous among investors. He held up a stack of papers and said, "Read 500 pages like this every day. That's how knowledge works. It builds up, like compound interest." In other words, the same principle that drives financial wealth can also drive intellectual growth. Ideas accumulate over time. Concepts connect. Patterns become clearer. And slowly, the reader begins to think differently. That is exactly what happened to Warren Buffett. The quiet power of a reading mind. Today, Buffett is often described as one of the greatest investors who ever lived. But if you look closely at the foundation of his success, it does not begin with money. It begins with curiosity, a young reader searching for ideas, a student discovering a philosophy that made sense of the market, a thinker slowly building a mental framework through books. In a world that often celebrates speed, excitement, and constant activity, Buffett represents a very different approach to success. He reads, he thinks, he waits. And through decades of patient discipline, that quiet intellectual foundation has produced extraordinary results. It is a reminder that behind many of the world's greatest achievements, there is often something simple and easily overlooked. A person sitting quietly with a book, learning, thinking, building a mind capable of seeing opportunities others miss. And perhaps that is the most powerful lesson hidden inside the story of Warren Buffett. Great minds are rarely accidents. They are built slowly, page by page, idea by idea, book by book.